You want to see what a stock in absolute freefall looks like? I mean, really it looks like on a technical level? Well, you're in the right place. Today, we're going to tear apart the dramatic story of a Web3 microcap stock, YDKG. Okay, let's just start with a punchline. As of October 24th, this is the last traded price, just over 6 cents. And look, that's not just a number on a screen, right? That is the result of an absolutely brutal sell-off. And if you thought that was bad, check this out. This is the damage from just 1 day of trading, down 15%. That's some seriously intense selling pressure, and it tells us there's a wild story unfolding here, like right now. So the big question is, what is YDKG, and how in the world did it end up here? Let's dig in and get some context, because you've got to understand the backstory to get the full picture of this collapse. All right, so YDKG, that's Yueda Digital Holding, is a player in the whole Web3 and digital economy space. But honestly, the most crucial part of their story is right here. It's a micro-cap stock. We're talking a market value of less than $2 million. And a company that small, well, that's just a recipe for some absolutely insane volatility in both directions. And wow, this timeline just says it all, doesn't it? I mean, look at this. Back in early September, this thing was trading at $6 a share. Fast forward to mid-October, and boom, it's down to 16 cents. And then, just a little over a week after that, it's sitting at 6 cents. This isn't just a slide downhill. This is like driving off a cliff. Okay, so now it's time to put on our detective hats. The charts, the technicals, they're screaming at us right now. And our job is to just listen to what they're saying. Let's dive into all the red flags, all the key indicators that are painting this incredibly bearish picture. First up, let's talk about moving averages. The easiest way to think about these is like the stock's historical center of gravity. They basically tell you what the normal price has been over different periods, 20 days, 50 days, you name it. And when the current price is way, way off from that normal, well, that's a huge red flag. And here's where it gets kind of crazy. Look at the sheer gap here. The price isn't just a little bit below its averages, it's in a totally different solar system. The average price over just the last 20 days was $1.86. Today, 6 cents. This tells you the downtrend isn't new, it is powerful, it is established, and it is in full control. All right, next up, let's check the momentum using an indicator called the MACD. Now, don't worry about the name. All you really need to know is that it helps us see if a trend is getting stronger or weaker. And for YDKG, you better believe it tells a critical part of the story. So here it is, the dashboard of doom. Basically, every single light is flashing red. You've got the MACD, which is deeply negative. That means the downward momentum is just crushing it. You've got the ADX, another indicator confirming this trend is super powerful. And the volume, it shows sellers are just completely overwhelming the buyers. I mean, literally every single core indicator is pointing in the exact same direction, straight down. Okay, so with a picture this bleak, you have to ask, right? Is there any good news? Is there any hope at all? Or is this thing just on a one-way trip to zero? Well, let's look at the other side of the coin, because in trading, there's always a counter-argument. When things get pushed this far in one direction, sometimes they snap back. So now we're going to hunt for clues that this stock might actually be oversold. And our main tool for that hunt is something called the RSI, or Relative Strength Index. Honestly, the best way to think about it is like a rubber band. You stretch it and stretch it and stretch it. Eventually, it's going to want to snap back. When the RSI drops below 30, it's basically screaming that the rubber band has been stretched way too far. The sellers might just be running out of gas. And this right here, this slide, is the whole story. It is the central conflict for anyone even thinking about this stock. On one side, you've got this undeniable freight train of a bearish trend. But on the other side, you've got all these indicators just flashing oversold, oversold, oversold. It's a classic technical tug-of-war. So let's be clear, the main trend is absolutely 100% down, but these other indicators, they're hinting that the speed of the crash might be slowing down. It's like the sellers are getting tired, and that little crack in the armor, that's what could open the door for a quick, short-term bounce. Okay, so we've got the data, we've got the conflict. What does this all mean for a trader? How do you actually use this information? Let's try to translate all this technical jargon into a concrete game plan, keeping in mind the massive risks here.
All right, these are the lines in the sand, the battle lines, if you will. The price is sitting just under a small support level at about 6.7 cents. If, and that's a big if, it can get back above that level, the first logical target for a bounce would be that resistance up at 8 cents. These are the make-or-break levels that every trader is staring at right now.
So really, the strategy kind of writes itself, doesn't it? If you're a high-risk trader, you might take a shot on a bounce if and only if the stock gets back above that support level. But if it can't, well, then the bears are probably going to keep running the show. And let's not lose sight of the big picture here. For any kind of long-term health, this stock needs to somehow get back above $1.86. Until then, it's in critical condition.
And yeah, let's be crystal clear about something. The analysis sums this stock up with one simple phrase: hypervolatility, high risk. I mean, the volatility reading is over 700%. 700. This isn't investing, folks. This is pure, unadulterated speculation. It's a total knife-edge situation where you could make or lose a ton of money in the blink of an eye. Which brings us to the final million-dollar question. When you look at all the evidence, this devastating downtrend on one side and these deeply oversold signals on the other, what is this? Is it just a high-risk gamble trying to catch a falling knife, or is it a calculated strategic play on that classic snapback rally? The data gives us all the clues, but in the end, it's the market that's going to give us the final answer.